Art Laffer is with us, Reagan economist. Number one, Art, to me, this looks like it's doable. You think it's going to get done?
First place, Stuart, it's yours and my idea. We've been touting this for so long. No, but we really have, Stuart. If you go back and check the shows, this is the one thing you can do quickly, get it done quickly, and it is not only doable, it will be a huge jolt. And by the way, it will pay for itself right away. Not only will you get more corporate tax revenues, because this $2 trillion will come back and you'll get more output, more employment, more profits, but you'll also get payroll taxes, income taxes, sales taxes, property taxes. There is no need for the stupid pay for this thing, because this one will pay for itself and lead to a lot of prosperity. I have not been happier in a long, long time, Stuart.
I can tell. But you're painting a very rosy picture. You're suggesting that we're going to get all $2 trillion coming back from overseas.
Oh, maybe not all of it. Okay, $1,987 billion.
Oh, come on. Right. You're not going to get it all back. How about this? I sense maybe a deal here. But the Silicon Valley people, they're the ones with all the money overseas. They want more H-1B visas. So President Trump says to them, you bring back that money from over there, all of it, and we'll give you some more H-1B visas. I smell a deal here. Is that too far out of bounds?
It's not only a deal. H-1B visas are wonderful for America as well as bringing that money back. It's a win-win. And when you call it a deal, a trade-off, I want those type of deals all the day, every day of the week and twice on Sunday. The more of these high-skilled foreigners who come into this country legally with H-1B visas, the better off America is, Stuart. I mean, this is exactly what we need in America, is high-quality, well-educated people to come and make us more productive, more output, more... H-1B visas are a huge plus, and so is bringing that money back.
But there's no mention here of cuts in the personal income tax rate. Maybe that disappoints you, but maybe that makes the corporate tax rate cut more doable.
Well, it makes the corporate tax rate cut far more doable. It's very difficult to get to the personal income tax codes, because there you get all the ideological nonsense of redistribution and which group should pay more, and, you know, all of that stuff, which is not true with corporations, because there is no redistribution problem with corporations, period. But when you look at individual codes, it takes a lot longer to go through that. For us, for example, we had to wait literally until 1986. It took us 5 years before we were able to get the individual income tax codes done correctly. As you know, Reagan cut taxes in '81, but he didn't drop the highest income tax rate on earned income at all. He just shifted the brackets out to offset inflation. But this, we will get the income tax ones, but it takes a lot longer, and might as well do what we can right now, and it's wonderful.
Yes, the market thinks so. Stay there, Art. I've got more for you in just a second.
But when you come back, we're going to be at 20,000 again.
You mean 21,000? There you go.
21,000, I mean. I was here the last
Just a couple of minutes, I'll be back to you, okay? Can you handle that?
You never know that market.
Well, let's take a look at that market. We're going to open up about 160-odd points again today. By the way, the close yesterday was 20,700.
Thank you.
So when we... thank you, Art. I did hear that, yes. So we're going to be within a couple of hundred points of the all-time closing high for the Dow Industrial Average today, this morning. I think it's the tax cut that's fueling this rally, and so too is the really strong level of corporate profits that are now being reported. Maybe this is the second leg of the Trump rally. We shall see. Let me give you those profit stories. First of all, McDonald's. Better sales, helped by the expansion of all-day breakfast, yes, the Big Mac, beverage value promotions, etc., etc. The stock will open at an all-time high this morning. Look at that pre-market. A gain of nearly $4, $1.38 on McDonald's. Better profits at 3M. You know, the Post-it people, actually, they make a slew of other products as well. That stock, though, is going to be down just a fraction of the opening bell. Caterpillar, strong numbers, and they raise their outlook in the future. They see signs of recovery in the industries that they serve. That is a Dow stock, and it's up nearly 6%. Big deal. Higher profit at the chemicals and seed producer, DuPont, helped by a rise in seed sales. That's going to be up nearly 2%. But weak profits at Coca-Cola. The Latin American operation, that was a drag, apparently, and Coke will be down just, 30 cents at the opening bell. James Freeman is with us this morning from the Wall Street Journal editorial page. I say that the profit reports so far are strong, and that's a big part of today's rally. And you say what?
You are correct. We had a good fourth quarter, and now in the this first quarter so far, looking like we might get maybe 10% profit growth in the S&P 500. Fantastic. You couple that with this new message of growth from Washington, President Trump sounding more like candidate Trump, focusing on growth. And that's what that 15% corporate tax rate would mean.
You're not one of those guys who says that a tax cut has to be paid for with offsetting taxes elsewhere. You don't want that. You just want a straightforward cut, right?
Right. You've got to grow the economy. That's step one. Once you've got a growing economy, you've got more people employed. You have less need for government services. You have the economy generating more cash to pay those bills. Debt and deficits are a huge problem, but you make it much easier if you've got a thriving economy that can fund that debt.
How much of the I'm putting an arbitrary number here, $2 trillion American profits parked overseas. It may be more than that. It's certainly not less, but maybe more. Right. How much of it comes back if you've got a 15% tax rate?
I would think a lot of it. At 15, you are highly competitive. You're below the average of the European Union. You're below where all of our major competitors are. You're not quite at that great Ireland 12.5% rate, but you really change the game and you end all of these corporate inversions. Instead of leaving, companies want to locate in the United States. So this would be an enormous game changer, and it really it goes back to justifying all of the optimism that went from election night till March 1, when investors really began to wonder if Trump was going to deliver on tax reform.
Seems to me like politics and money, which is what we do, aligning in a very positive way. You'd say that?
And it's great for workers. Kevin Hassett, the economist, he's now joined the Trump administration, but he did a lot of research showing that high corporate tax rates end up hurting workers, not just the investors who own the company. So this would be a huge win if we get anywhere close to that 15%.
All right, James, stay there for a second. I want to go back to Art Laffer. No, we're not at 21,000 just yet, Art, but we're awfully close. As you know, Art, the administration may impose 20% taxes on lumber imported wood coming in from Canada. Surely, Art, you do not like that. Could be a trade war.
No, I don't like that, but I want to tell you that James Freeman is just dead on all the comments he made. But
what is this, a love fest amongst everybody on the side?
It is. You know, I just don't want to end this on a downer. Let me just say that it's wrong to do that. We shouldn't have barriers of trade, especially not with Canada. My goodness, I mean, they are the 52nd, 53rd, 55th state. I mean, we shouldn't do that with Canada.
Oh, you're in trouble now, Art. You are in trouble now.
They might not like that, but I love it.
If Canada is the 52nd state, which is the 51st?
The 51st state, I think, would be the UK.
Yes,
oh,
yes, excellent.
Maybe Ireland, you know. But Stuart, it makes no sense to do this. But let me just say that if this is the second leg of the Trump rally, let me just tell you that the Trump period is going to be a millipede. There are going to be thousands of legs to go on this. You're going to see a boom of unprecedented proportions. We've talked about this before, but you should just leave it on this high note that we are entering this period of enormous boom in this country. I mean, it'll be as much as the Reagan-Clinton boom. I'm just very excited about what's happening, and it's finally getting going. And it just couldn't be better.
Leave it right there, Art. Okay, just don't add to that at all, because that soundbite is going to be playing for the next 3 hours. In fact, the next 30 days we're going to run
it. You've got it. It's yours.
Art Laffer, you're all right. Thanks very much.
Thank you very
sir.
much, Stuart. And James, good comments.
Thank you.